time and ended up losing almost all my savings basically because of this emotional reason. I would buy it at the wrong time because the market has gone up. It is, people will think that it's going to continue to go up.
Yeah.
You'll buy at the wrong
Yep.
time, and when it starts going down, you think that it's going to continue to go down, but you sell it and it starts going up.
Yeah.
So, so that happens all the time because our capabilities are our capabilities, and we are not capable in every direction. I mean, I would be the first one to admit that not everybody can do good in every area, so to
All right.
say, right?
Yeah.
I mean,
Yeah.
sorry, go ahead.
No, no. I would just add on to that. That um, you, the ability to actually control an investment is possible in real estate, whereas in the stock market, there's so much panic that we discussed that there really you have no control, and neither does your stockbroker. Whereas with commercial real estate, I'm not talking about single family. Single family is a different ball game, but in commercial real estate, you have the net operating income, um, and as long as you can raise that net operating income, you can raise the value of a property in any during any market. So you're not at the whims of the emotions of a market. Now, with single family, you don't have that capability, right? You're basing on your comps, and your comps are your neighbors, and whatever happens there, that's what's going to happen to your property too. But as long as you can raise that net operating income, you divide that net operating income by the cap rate, and out spits a value. So if you're raising that net operating income, which is what is happening now with rents, right? Everybody's like, oh my gosh, interest rates are rising, cash flow is getting squeezed. Well, rents are still rising, and that's raising the net operating income, and that's raising the value of the property. Um, you know, Another interesting point, getting a little off topic, but there's a graph that shows what happens with interest rates over the last, gosh, forever, since like the early 1900s. Um, and on that graph, I wish I could show it, but it shows every recession, and leading up to that recession is a rise in interest rates, right? It's quantitative tightening, which is purposeful, right? The Fed's doing it. They're operating the puppet strings.
Yeah.
Um, they're rising those interest rates, and they're trying to slow down the economy, and then we head into a recession, and some are longer than others, but they really don't last too long. Sometimes it's just a couple quarters. Sometimes maybe it can be a year. Um, but what happens during those recessions, and it's marked in gray on this chart. You can look it up. It's Fred. Look up Fred interest rates, and you'll see it. Um, what happens is the, the interest rates immediately start to decline, right? And they decline. They fall pretty fast, and that's the Fed doing quantitative easing again, right? They're lowering interest rates. So my thought is right now, yeah, deals are tighter. It's been a challenging year to roll out deals to our investors. The cash flow is a bit tighter. Instead of 8% now, 5%. Um, but here's my rosy outlook anyway, and we're recording, so I'm on the hook. um, but I can see getting into deals now that cash flow still have a very positive total return projection. But in a few years, when interest rates come down, and I'm telling you right now, they're going to come down. A lot of people are fearful that they're going to go to the moon. They're not. The Fed is going to do this for a little while. What did they say? Seven rate hikes, and then they're going to start to ease again. So interest rates will come down. I don't know if it's going to happen in the next year, but next year, 2, maximum 3. I don't think it's going to be that long. Interest rates will come down, and that might be a really nice, attractive time to refinance and improve cash flow in that deal that you just got in. So I think there's a silver lining to this.
Yeah.
And the Fed's they know what they're doing. So yeah,
Yeah.
that's a different outlook on interest rates.